But before that, I'd just like to lay out a few cautionary words. Anyone who has ever been in the markets for any length of time knows that October can be a particularly virulent month. What is not commonly known is that from a technical analysis point of view, the building blocks for October are usually laid out as seen in September. Hence, it is worth taking a closer look over the next few weeks, just in case. Now, to temper that, I would point out that my WD GAN stroke Metonic Panic video back in December 2019, where I pointed out how WD GAN, technical analyst, had in an extrapolation of his financial timetable from 1909, had just one word for 2020, and that was panic. Well, for 2021, he has 3 words, and they are low stock prices. So you can see it's not always negative, but I hope you can see why I'm cautious during September.
Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A bearish black crow yesterday, and if you count the previous session's schizo pattern of an indecisive spinning top and at the same time a bearish harami, well, I suppose that may make it a third bearish black crow after Friday's bearish engulfing pattern. There was also a weekly key reversal down last week. Now the market used the cap of the overhead combination of the flatlining medium moving average, currently at 70.45, and the short medium moving average, currently 70.41, as ammunition for an attempt lower, down to test the recent 50% Fibonacci line at 69.76. But prices stalled there, and we saw no move lower. Importantly, in the even greater scheme of things, we're also set with only a today and tomorrow to go to possibly have a monthly key reversal here. If we close tomorrow, Thursday the 30th, either over 70.97 or under 69.66, then we'd be on. Right now we're looking at a lesser outside month, as last week's move upwards has taken us up and away from a monthly key reversal down. Now so far today, a slightly higher open and another test to that 50% Fibonacci line at 69.76, down there to that test. However, it was held and the market has reverted back up over both the medium and short medium moving averages. And whilst not making today a daily key reversal up, it's still gone a long way to threaten a monthly key reversal up. German DAX futures. A bearish engulfing pattern yesterday, which was, I suppose, a follow-on to the previous session's day 2 in a 2-day bearish inverted hammer pattern, but not in any way helpful to yesterday's other pattern of a bullish harami. Anyway, the market opened a little higher and rose up to test the overhead medium moving average, currently at 15.618, but failed to make anything of it, and we had a drop down, a significant way towards supports at the previously mentioned old September to December 2020 reverse head and shoulders neckline, currently at 15.050, and also the nearby rising long moving average, currently at 15.12. Prices didn't quite make it down there, halting as they did just below the lesser Fibonacci level at 15.289. Now, please also note that unlike some other stock index futures which have had similar moves, in a DAX futures here there is no monthly key reversal possible here at all. So far today, a higher open on the lesser Fibonacci level with a small test down to yesterday's low, which was swiftly turned around, and we're now seeing prices starting to move up towards yesterday's, well, from yesterday's close, but very, very slowly. US E-mini S&P futures. A bearish long black Mariposa yesterday, and also a second bearish black crow that was more than a suitable follow-on to the previous session's bearish engulfing pattern. The market punched down and closed below the broken May-to-date uptrend, currently at 63.89. Also the important near nexus of the extension of the upper trend line, currently 43.52, of the other rising wedge pattern, the May to July rising wedge, and the slowly rising medium moving average, also currently at 43.59. These are, I suppose, the main supports seen below, and the market closed below all of them. The next supports are recent and questionable, lows at 43.21 and 42.93. Anyway, over all of this, please remember my recent caution. This is one of the stock index futures that has done enough in September to make, with just the rest of this week to go, that's literally today and tomorrow, to make a possible monthly key reversal in September. If we close tomorrow, Thursday the 30th of September, either over 45.21 or under 43.89, then we'd be on. Right now, well, we are looking at a possible outside month as the market, well, we were looking at a possible outside month as the market has come back in from a full key reversal down, see it this time last week, and has changed, and we're looking right as a possible monthly key reversal down, if only just in September. Now, so far today, a higher open, prices moving up over the next nexus again, but not as far as the May to day uptrend, and not as far as to change the potential monthly key reversal down back into an outside month. Only one word for this: caution. French CAC 40 futures. A third bearish black crow yesterday. There was also a bearish long black Mariposa as well. Due to its position and also its size, it was also a more than suitable follow-on lower to the last two sessions' two-day bearish homing pigeon pattern. The market followed the data here rather than tradition. In the process, the market punched down and closed below the upper downtrend trend line of the recent possible June to September diamond top, currently at 65.99, as well as the very nearby and very slowly rising medium moving average, currently at 63.89. Now, prices finally halted their decline at the lesser Fibonacci level at 64.94, closing the day just below it, or just above it actually. Now, going back to the possible diamond top, the June to date diamond top pattern, if this does indeed turn out to be a diamond top pattern, will have a potential target X in the 62.42 area. It is far from a perfect diamond, especially as the low was formed before the high of the actual diamond. However, it is still there, and I should also point out once again something I highlighted last week and early this week. The market did a lot to fill the weekend gap that showed up last week. However, I have been very careful about my phrasing there. You see, the original gap was not filled. The gapping move up between Tuesday and Wednesday last week left a very, very small gap between 65.59 and 65.61. It was only yesterday's large move lower that finally filled in this gap. Even so, the first 2 days of last week could still be seen as an island bottom, with all the implications that brings. Now finally, this contract shares something with the DAX stock index futures. It will not be a monthly key reversal here. So far today, a higher open and a move up, but halted by the overhead, very slowly rising medium moving average. Nevertheless, it still may give us a possible bullish harami for today if we close anywhere near where we are now. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.